Hello everybody, welcome to Unit 3, Chapters 5 and 6, Intermediate Accounting 1. I'm Maria Simmons, and we are going to go over several exercises tonight, examples from your text. So let's get started. The first one we are going to go over is E519. It's journalizing a purchase transaction from an invoice. This is in regards to Learning Objective 2 in Chapter 5, which is account for the purchase of merchandise inventory using a perpetual inventory system. So what we have here, it gives you the following information, that as of October 1st, you have cash of $769.35. And Kingston Tires received the following invoice from a supplier, Fields Distribution, Inc. Here is the invoice. Gives all of this information, the date, sold to, the payment terms, net 30, gives the description of what was sold, how many was shipped, the price, and the total amount. When they were due, the due date with the discount, and if it's paid on this date, without the discount. So this is what you have, the requirements. Journalize the transaction required by Kingston Tires on September 23rd, 2018. Do not round numbers to the nearest whole dollar. Assume tires are purchased on account. Journalize the return on Kingston's books on September 28, 2018 of the D39X4 radials, which were ordered by mistake. Do not round numbers to the nearest whole dollar. And the third requirement is journalize the payment on October 1st, 2018 to Field Distribution, Inc. Do not round numbers to the nearest whole dollar. So all of the information you need is right here. And right here, how much cash you have. So the solution is here. Here are the requirements, 1, 2, and 3. Here's how you journalize them. On September 23rd, you debit merchandise inventory for $929.60 and credit accounts payable. That's the total transaction. And then on the 28th, you debit accounts payable for $152.48 for merchandise inventory. And that is for the return of the radials. On October 1st, you debit accounts payable, $929 minus the $152.48. So that's $777.12. And you credit cash. So you have the total $777.12 minus $7.77 equals $769.35. Your merchandise inventory, $777.12 times 1 cent equals $7.77. So that's all. These are your solutions. These are the payments. These are the entries that would be made for the purchase transactions from the invoice to Kingston Tires. The next exercise we're going to go over is preparing a multi-step income statement. One of the exercises you did was a single step, but I thought you should also see a multi-step income statement. The parts of a multi-step income statement, you have the selling expenses, of course, administrative expenses, operating income, and other income expenses on a multi-step income statement. And this is from learning objective number 5 from chapter 5. Learning objective 5 is, of course, preparing a merchandiser's financial statements. So the financial statements we're talking about are income statement, balance sheet, and statement of owner's equity. But for now, we're going to prepare a multi-step income statement. This is all the information you need to prepare a multi-step income statement. The gross profit is right here. So this is what a multi-step income statement looks like. You enter the net sales revenue. It's for a time period, year ended. Net sales revenue, $235,700. Cost of goods sold, $107,550, which leaves you a gross profit of $128,150. Then you enter your operating expenses, $27,400. Your administrative expenses, $14,200. Then you total those as total operating expenses, $41,600. And you subtract those from your gross profit, and that equals operating income of $86,550. Then you add in any other income or expenses. This would include interest expense. So you subtract that here, $2,800. So you subtract that, and that gives you your net income, which is $83,750. So this is what a multi-step income statement looks like. It has the other income and expense section in it. Excuse me. The next one we're going to go over is journalizing multiple performance obligations and sales transaction, which is learning objectives 3 and 7, which 3 and 7 are account for the sale of merchandise inventory using a perpetual inventory system and account for multiple performance obligations using a perpetual inventory system, Appendix 5A. So they ask you to journalize the following sales transaction for Morris Supply, and it says explanations are not required. On March 1st, Morris Supply sold merchandise inventory for $3,000. The cost of the inventory was $1,800. The customer paid cash. Morris Supply was running a promotion, and the customer received a $150 award at the time of sale that can be used at a future date on any Morris Supply merchandise. On March 3rd, they sold $6,000 of supplies on account. Credit terms are 210 net 45 FOB. Destination. Cost of goods is $3,600. On March 10th, received payment from a customer on the amount due from March 3rd, less the discount. Oops, sorry. On April 15th, the customer used a $150 reward when purchasing merchandise inventory for $200. The cost of the inventory was $120. The customer paid cash. Sorry, I have allergies. So here is the solution. For the March 1st transaction, you would debit cash for $3,000. You would credit sales revenue, $3,000 minus the $150 award, and then you would also credit unearned revenue for the $150 award because you haven't earned that revenue yet. It will be at a future date. Also on March 1st, cost of goods sold for $1,800 and merchandise inventory for $1,800. On March 3rd, accounts receivable for $5,880. Sales revenue $6,000 minus $6,000 times 0.02. $58.80. On March the 3rd, cost of goods sold $3,600, merchandise inventory $3,600. On March 10th, you received cash $58.80 and accounts receivable $58.80. On April 15th, you received cash $200 minus $150, the award $50, unearned revenue, you debit that to take care of the award. The sales revenue was $200. Cost of goods sold was $120. Merchandise inventory, that's the cost of the inventory, was $120. We're going on to Chapter 6 now. Chapter 6, correcting an inventory on E6-24, correcting an inventory error 2 years. It covers learning objective 5 in Chapter 6, which is measure the effects of merchandise inventory errors on the financial statement. So here, Nature Foods Grocery reported the following comparative income statements for the years ended June 30th, 2019 and 2018. And during 2019, Natural Foods Grocery discovered that ending 2018 merchandise inventory was overstated by $5,500. Now, they would have done that by doing a physical count. They could have done that in an audit or a cycle count, which I've talked about. Requirements: prepare corrected income statements for the 2 years. And 2, state whether each year's net income before your corrections is understated or overstated, and indicate the amount of the understatement or overstatement. So here are the corrected income statements. I'll show you the calculations below. This is for requirement 1. Merchandise, incorrect merchandise inventory, $17,000, and it was overstated by $5,500. So the correct merchandise inventory was $11,500 in 2018, at the end of 2018. So the beginning merchandise inventory in 2019 had to be changed. The requirement number 2, and before the correction, net income for the year ended June 30th, 2019 is understated by $5,500, and net income for the year ended June 30th, 2018 is overstated by $5,500. So it just moved it from year to year. E6-25, computing the inventory turnover and days sales in inventory. This is in regards to learning objective 6, which is use inventory turnover and days sales in inventory. Sorry about that. And days sales and inventory, learning objective 6, which is use inventory turnover and days sales and inventory to elevate business performance. Calm Day reported the following income statement for the year ended December 31st, 2019. And it wants you to compute Calm Day's inventory turnover rate for the year and compute Calm Day's sales in inventory for the year. Inventory turnover is 5.55 times for the year, and how you do that is average merchandise inventory, beginning merchandise inventory plus ending merchandise inventory divided by 2. So that's 9,000 plus 12,200 divided by 2 equals 10,600. Your inventory turnover is, you calculate that by cost of goods sold divided by average merchandise inventory. So that is 58,800 divided by 10,600. So that equals 5.55 times for the year. So your inventory turnover is 5.55 times for the year. Your requirement number 2, days sales in inventory is 65.77 days for the year. Calculations for that: days sales in inventory, 365 days in a year divided by inventory turnover. That's 365 days divided by 5.55 times equals 65.77 days. The 5.55 times was calculated in requirement number 1. That is all of my presentation I have for you tonight. Here's some important information that I keep reiterating to all of you, and it is very important that you understand this. You need to read all of the instructions on all of your assignments and follow all of the instructions. It's very important. Follow the rubrics. That's what I'm grading on. Some of you had great discussion questions, had great papers, but you didn't follow the rubrics. I can't give you a good grade if you do not follow the instructions. No matter what the content is, if you do not follow the directions, I'm going to count off for it. Use references. None of you, most of you, you aren't using references. Your textbook does not count. Wikipedia does not count. Please use Dietz Library. It is a very good resource of academic journals and magazines. I've provided the website here. Please use this resource. It's very good and they are very helpful online. There's a chat box. They are very, very helpful. It's a lot better than just Googling a resource. These are very reliable sources, and it gives you the citation reference right there with the journal information. APA, it's provided for you. So a lot of the work is done for you. The citation is right there. Follow APA formatting. It's a requirement. It's a requirement for all of your classes. So please follow APA formatting. If you need assistance in this, contact the SC Online Writing Center at this email address. They will be happy to help you if you need help with APA formatting. It is a free resource. Not many things are free. This is free. They will be happy to help you if you don't understand APA formatting. So please, 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 I can't stress enough. It is part of your grade. APA formatting is part of your grade. It is a big part of your grade. I mean, it counts. So if you don't think it's a big deal, it is, because it's part of your grade. So it counts off automatically if you aren't using it. That's all I have for tonight. I hope you guys have a great rest of your week. We have a live session on Tuesday at 6:30. If you can't make it, it'll be recorded. And I will see you all later. Bye.